Most people spend 40 years working and retire broke. The system is designed to keep you just comfortable enough to never leave. You clock in, collect your paycheck, and watch your retirement account grow at a pace that barely keeps up with inflation. Meanwhile, the people who retire comfortably are not relying on a single income stream. They have built something different, something most employees never consider until it is too late. Welcome back to KB Bluetree, where we help you build wealth through smarter financial strategies. Today, we are diving into a topic that could change your financial future, comparing two powerhouse dividend growth ETFs that consistently outperform traditional savings. We are talking about VYM and SCHD, two investment vehicles that have helped thousands of people create passive income streams while they sleep. By the end of this video, you will know exactly which one fits your financial goals and how to start building wealth today. Like and subscribe to KB Bluetree for more insightful content that helps you take control of your financial destiny. Problem. Here is what nobody tells you about traditional employment. You can work hard, get every promotion, and still end up living paycheck to paycheck. The math simply does not add up anymore. Housing costs are rising faster than wages, healthcare premiums eat into every raise you get, and that retirement account you have been funding for years. It is growing slower than the rate of inflation. You are running on a treadmill that keeps speeding up while your destination stays the same distance away. The average American works 40 years and retires with less than $200,000 saved. That sounds like a lot until you realize it needs to last 20 or 30 years. You do the math and suddenly you are looking at $8,000 a year to live on, maybe less after taxes and healthcare costs. This is the reality millions face, and it is not because they were lazy or made bad choices. It is because they followed the traditional path without building alternative income streams. The real problem runs deeper than just stagnant wages. We have been sold a lie about job security. Companies used to reward loyalty with pensions and steady raises. Now they reward shareholders with stock buybacks while wages stay flat. You could be the hardest worker in your department and still see your buying power shrink year after year. This is wage compression, and it is happening across every industry from tech to healthcare to education. Meanwhile, the cost of everything essential keeps climbing. Your rent goes up, your groceries cost more, your car insurance doubles. You get a 3% raise and think you are moving forward, but inflation is running at 5%. You are actually falling behind while feeling like you are standing still. This is the trap that keeps people working until they physically cannot anymore, and even then they are not financially secure. The system is designed this way: keep you comfortable enough to not quit, but stressed enough to never feel secure. You cannot call in sick without worrying about your job. You cannot take a real vacation without checking emails. You cannot invest in yourself because every dollar is already spoken for before you even see your paycheck. This is not living, this is surviving, and there is a better way. Solutions. Building wealth outside of your 9-to-5 starts with understanding the 3 pillars of income diversification. First, you need passive income that works while you are sleeping. Second, you need assets that grow in value over time. Third, you need a strategy that requires minimal time investment once it is set up. This is where dividend growth ETFs like VYM and SCHD come into play, and understanding the difference between them could mean thousands of dollars in your pocket over the next decade. Let us break down VYM first. The Vanguard High Dividend Yield ETF holds over 500 companies that pay above-average dividends. We are talking about established giants like Johnson & Johnson, JP Morgan Chase, and Procter & Gamble. The expense ratio sits at just 0.06%, which means you keep more of your returns. VYM currently yields around 2.8%, so every $10,000 you invest generates roughly $280 per year in dividends. The real power comes from reinvesting those dividends and letting compound growth do the heavy lifting. If you are interested in launching your own solo, digital, or online business, watch this video, The Digital Freedom Blueprint. Scale your solo business to $10,000 a month. It will walk you through every step from launching to scaling. Now available on Gumroad and PayHip, links in the description. Now compare that to SCHD, the Schwab US Dividend Equity ETF. This fund is more selective, holding only about 100 companies that meet strict quality criteria. They focus on dividend growth, not just current yield. SCHD has historically outperformed VYM in total returns because it concentrates on companies that consistently increase their dividends year after year. The expense ratio is even lower at 0.06%, and it currently yields around 3.5%. That same $10,000 investment generates $350 annually, a meaningful difference when compounded over decades. Here is the framework that matters. YM gives you broad diversification with lower volatility. If you want stability and do not want to think about your investments, YM is your safety play. SCHD gives you higher growth potential with slightly more concentration risk. If you are willing to ride out market swings for better long-term returns, SCHD has historically delivered. The choice depends on where you are in your wealth-building journey and how much time you have until retirement. You can start with just 5 hours per week dedicated to building this side income stream. Hour 1, research your investment options and open a brokerage account. Hour 2, set up automatic investments so you are buying shares every month without thinking about it. Hour 3, learn about dividend reinvestment and how to maximize tax efficiency. Hours 4 and 5, educate yourself on market cycles so you can buy more when prices dip. This is not complicated, but it does require consistency. The key is starting now, not waiting until you have everything figured out. You do not need $10,000 to begin. You can start with $100 and build from there. Every dollar you invest today is a soldier working for you tomorrow. Set up automatic transfers from your paycheck. Treat it like a bill you cannot skip, and watch your passive income grow month after month. Within a year, you could have a foundation that generates hundreds in dividends. Within 5 years, that could be thousands. Within 20 years, it could replace your entire salary. Success story. Meet Brandon, a 34-year-old marketing manager who was tired of trading his time for money. He was making $65,000 a year, good money on paper. But after taxes, rent, and student loans, he had almost nothing left to invest. Brandon started with SCHD because he wanted aggressive growth and could handle the volatility. He began by investing just $200 per month, money he found by cutting subscription services he barely used and meal prepping instead of eating out. For those who wants to implement AI to amplify your career, watch this video, the Augmentation Masterclass, Human plus AI equals Career Advantage. You will love this video walkthrough, now available on Gumroad and Payhip. Links in description. 5 years later, Brandon has built a portfolio worth over $25,000 that generates $875 per year in dividends. But here is where it gets interesting. He took those principles and applied them to other income streams, freelancing on weekends and building a small consulting practice. His total income is now $180,000 per year, and his investment account continues to grow. Brandon did not get lucky, he got strategic. He built a system that works, whether he is at his desk or on vacation. And now he is financially secure in a way his 9-to-5 alone never could have provided. Call to action. Your wealth-building journey starts with one decision today. Calculate your time to freedom number right now. Take your monthly expenses and multiply by 300. That is roughly how much you need invested to replace your income with dividends. Sounds impossible? Break it into smaller milestones. If you need $900,000 total, your first goal is $10,000, then $25,000, then $50,000. Each milestone gets easier because your money starts working for you. Open a brokerage account this week if you have not already. Choose VYM for stability or SCHD for growth, or split between both for balance. Set up automatic investments and commit to never touching that money except to reinvest dividends. Check your account once per quarter, not every day, because wealth building is a marathon, not a sprint. Like and subscribe to KB Bluetree for more strategies that help you build financial freedom outside the traditional system. If you are interested in learning more about smart investing strategies and building wealth through proven methods, check out KB Bluetree Finance and Future for more insightful ways to grow your money. We break down complex financial concepts into actionable steps you can implement immediately. Your future self will thank you for the decision you make today. Let us build wealth together.